ladies and gentlemen, there are ladies. Yeah. Okay. Ladies and gentlemen, it is my pleasure to welcome you to the 2021 Annual General Meeting of Shareholders of Anuva Investments Limited, being held for the first time online. I'm Alan Gillett. Other directors present are fellow non-executive directors, Kobus Nel and Michael Hannebach. Executive directors, Neil Hobbs, who is also our Chief Executive Officer, and Zane de Decker, as well as Greg Sinclair as alternate director to Neil Hobbs. We also have James Rothman as the Chief Financial Officer and Edmund Robbie representing Hobbs Sinclair Advisory as the Company Secretary. I'd like to attend to the formalities required by the Companies Act before we proceed with the meeting. Section 18(1) of the Memorandum of Incorporation of the company requires that the holders of at least 25% of the voting rights and 3 members present and entitled to vote shall constitute a quorum. As the requirements for the constitution of the meeting have been met, I declare the meeting to be properly constituted. The notice convening this meeting, together with the 2020 annual financial statement, was posted to members on the 13th of April 2021 within the required notice period. May this notice be taken as read? Yes. Thank you. Please note that there are no matters arising from the previous meeting's minutes. A copy of these minutes are available on the electronic voting form. Section 17 of the company's MOI allows for electronic voting. I'd like to hand over to our CFO, James Rothman, to explain the voting process.
Good evening, ladies and gentlemen. With this year and the electronic voting, as a result of the COVID pandemic, we thought that we'd make the voting electronic as well. We've tried to keep the process as simple as possible, and I'd just like to remind you that 1 share will count as 1 vote. You'll see in the slides currently, and we've also sent this before as an email, that you can access the voting form either via your smartphone, by scanning the QR code that's currently on screen or on the email, or you can visit the link tinyurl.com/Anuva-vote, where you can also access the voting form. So if you can do that while we're busy explaining the voting form. So you'll see on the voting form, you please have to enter your name, your surname, or the company's name that you represent, or the trust name, and also the ID number and the registration number. If you scroll down further on the voting form, you'll see that there's the resolutions are set out with an election option for, against, or abstain. You can select while we're going through the meeting as we attend to the different resolutions. At the end of the voting form, you'll see that there's a space for general remarks and comments where you can fill in any questions or remarks or comments, and then just type your name as proof of electronic signature, and remember to actually click on the submit button right at the bottom of the voting form. Then also there's obviously questions with everyone not being present in the meeting itself. You can make use of the Zoom question function that should be at the bottom of your screen. We will give the shareholders some time to ask questions, and it will be presented to the panel. You can also email me, and you can also request access to be invited onto the panel. So if any of the shareholders actually want to come onto the panel to ask a question live in real time, you're more than welcome to do so, and we'll give you access to ask those questions. Back to you, Alan.
Thank you, James. I'd like to hand over to Neil for a few minutes to present Anuva's achievements to date, the director's report, and annual financial statements with a summary highlighting key facts and figures before we move over to the resolutions. Neil.
Thank you, Mr. Chair. Good evening, ladies and gentlemen. Thanks for your attendance, and it's really great to see you here, especially you, Michiel, you were here right in the beginning. So the first slide here shows us what has happened to the growth of Anuva from 2015. In 2015, we kicked off with 15 million rands capital, and you can see the growth in the fund from that point in time to 28th of February 2021, when we closed out with a share capital of 1.1 million rand. So quite a nice growth in terms of share capital. And what you see on these different colors is the different share classes that we have incorporated. So Anuva is quite an interesting company in that we have asset-specific equity. We have equity classes that match the asset and risk classes that the investor chooses. So if we look at the bottom, the orange band, that is the Class A shareholding, the very first share class that we opened. The band above it is Class C. That is the second share class that we opened. The big growth we've seen in the last 2 years, the purple there, that is the property fund. So we took a long time before we decided to get involved in property and choose the appropriate partner. And you can see that at this stage, the property fund that's Class F, is the biggest portion of Anuva. And then interesting one emerging right at the top, the orange there is what's called Class O, which is what we term using omnibus class, and that is for a broad range of investments that are investor chosen. So we can move on to the next slide. As we exist at the moment, I believe that we are the largest single 12J company. Certainly the largest capital has been raised by Westgrow, but we are the largest single fund. So instead of being a number of 12J funds, we have put all of our eggs in one basket, and that is why we have the share capital that we have, and why we've elected for the asset-specific equity. That gives us quite a lot of flexibility in terms of the various parameters of 12J, and that allows us to accommodate a lot of different interests in the shareholder class and the asset class. Right from the start, we believed in transparency. So every year we publish our annual financial statements, and these financial statements have got more and more complex as the years have gone by. So we had a good trading period from 2016 to 2019. We traded consistently and profitably during that time. And now in 2020, when we get to the results, we have traded at a loss for this period of 11 million, and that's really the consequence of some COVID-19 write-downs. During the time of our since inception, we have returned 34 million rand to shareholders by way of dividend. We all know that Section 12J is soon to die, in that from end of June, that section of the Companies Act, of the Tax Act, will no longer exist. So the question is this the end of 12J? Well, from an Anuva perspective, certainly not. And we would expect to see ourselves continuing to bring tax-efficient investing to our shareholders in a manner that matches their investment profiles with the asset and risk profiles that they choose. We'll continue to be completely transparent in the way we deal with our shareholders and our assets and our investments. And we believe that we have a very cost-effective overhead structure, that this entire company now, which is a public company, is managed within 2% of capital raised. Next slide. Now, the property fund has grown very quickly. That 600 million has been invested over the last 2 financial years. So that's February 2020, February 2021. And we are on a capital drive at the moment to expand our capital base further before the end of June. property fund in its own is quite innovative because we have really three options there for the Class F investors. And those are designed to suit their profit and their risk profile. So there's the Flight Select, which eventually targets a specific investment that the shareholder will be gaining access to. Partnership fund is where the investor partners with the development partner. And there's also a loan option available for shareholders who wish to leverage their investment into the property fund. We can go on to the director's report now. For this year, we've reported a loss of 10.27 million rand. And sorry, we're reporting in terms of IFRS 10.27 and 10.28. What that requires is that we don't consolidate our financial statements, but we rather value and revalue our investments on an ongoing basis. So the valuation of the investments is kind of the core of the financial results as we present them. As we exist as a company, we are liquid, solvent, and a going concern, and we expect to be in business for several years hence. Our balance sheet is extremely strong, and notwithstanding the loss that we brought to account now in the revaluation of our assets, we're trading very well. The underlying companies are trading well, and we expect to be showing very good results for the current year. Our focus for the last year was to enhance our management interaction, to consolidate our investment strategies in the various companies in which we've invested. And what that means is we're not throwing our bread too widely on the waters. We are sticking with the companies that we've invested in, and we're engaging with management to form a very good base of growth to sustain the extraordinary growth potential that we believe these companies have. So we're really looking at polishing the marbles that we already have, rather than bringing new companies into the stable. And I'm talking now specifically about the Class A shareholders. COVID was a shock to all of us, and we had some immediate concerns, as one would understand. And what we did as a board and investment committee is we put in place almost a kind of intensive care unit where we interacted with every investment on a weekly basis. And then the investment committee and board met on a weekly basis to ensure that we were on track. Generally, what we did, we predicted quite a strong drop-off in revenues during that time. And I'm pleased to say that our predictions of the way in which revenues would drop off didn't eventuate. In fact, we did a lot better through COVID than what we anticipated. Those businesses that were dependent on people interaction, such as Cape Mohair, where people have to work in a factory, and we couldn't do that during lockdown, they were quite affected. New Mobile was also badly affected because the whole business was built on selling a cell phone to an employee in the company premises. So we weren't allowed that access to canteens and shop floors. So for a while, we were very stagnant with regards to growth. So we were, and I really want to thank the board and the investment committees for the time that they put in, the unstinting time, to make sure that we shepherded the group through the COVID crisis, and we came through with very little damage to the underlying businesses. Property funds, also, our timing of going into property was quite fortuitous, because we have really only started populating our property assets now, in terms of them going into the market and looking for occupancies in the hotel space. And at this stage, we're running with about 78% occupancy. So we were not hit with the initial hammer that hit the tourism sector. Also noteworthy is the sale of Ubusha. Ubusha was one of the Class C assets, and we wrote it up in the preceding year, the 2019 year. And I'm pleased to say that when we exited that in the 2020 year, the year under review, we in fact realized a further gain when we exited. So that tells us that our methodology of valuing that asset was fairly accurate, that we hadn't fully priced it on the revaluation. Yeah, here we're looking at the fair value adjustments, and I must comment, we've had one or two questions as to why our annual financial statements were released so late. As a board, we deemed it prudent to sit out the COVID crisis and see what the impact was going to be on the various companies we had invested in, so that our valuations could be as accurate as possible in terms of what the impact was of COVID was on those investments. So that delay in the release of our results was fully endorsed and approved by the various regulatory authorities. But going forward, there's also been quite a lot of rearrangement of year ends with the different companies we've invested in. So going forward, all of the companies that we've invested in have a February year end, and then Anuva itself has a 31st of May year end. So the financial statements for the underlying companies will be completed by 31st of May, and then we will be releasing our results by 30th of August. So our subsidiaries will complete within 3 months, and we will complete within 3 months thereafter. So we will be getting our results out pretty snappily in the future. If we look at the assets that have been valued up and down, we can see the top four there. Mastercare has been down valued by 2.1 million, which is a relatively minor adjustment. New Mobile Gauteng and Mastercare Mobile Coastal, these are the two new mobile companies. You can see a significant reduction in asset value there of 35 million. These companies were basically idle while we were in the hard lockdown period, and you see that reflected in the valuations there. Cape Mohair, a very long cash flow cycle business. The whole process of stopping the production cycle, stopping the sales cycle, and then getting that going again cost us quite a bit of headway in terms of work in progress and working capital. But there's a relatively minor write-down there, 1.5 million. Ubusha, as I say, we disposed of, and we disposed of at 12.6 million rand more than what our revaluation had been in the previous period. Medac, we exited that investment with a gain of 1 million rand. In other words, we evaluated it as a lower value than what we finally exited the Medac investment at. Next slide, James. Just a recap here on the COVID response. Weekly meetings throughout the COVID period. A lot of cost cutting implemented at the time, looking at essential cash flows. I think our responses were almost immediate. And what we're really pleased about is that we did not retrench, or in fact, we only retrenched one person throughout the group through that entire COVID period. So not only will we be able to preserve the businesses, but we were able to preserve the jobs of the people who work in the various companies. It's kind of Cape Mohair is a business that has done pretty well over the year. So a year ago, we were doing 93,000 pairs of socks in the course of a month. That has gone up to 142,000 pairs of socks per month now. We have machines that are on the water to add to our production capacity there. And we already have orders to pull those machines once they're fully operational at the end of July. So we'll have extra production capacity for the Christmas trading period. Mastercare has also worked quite strongly on its corporate revenue, which has gone up by about 400,000 rand a month on average. There has been, later than we expected, there has been an erosion of the debit order income for that company, which we're addressing at this point in time. Yes, James. Right, New Mobile is the company that we've marked down, or the two companies that we've marked down. And here you can see really what happened to the business. If you look at that slide in two phases, the first 6 months and the second 6 months, or second 8 months. So you can see there during the period of hard lockdown in COVID, it was very placid and our revenues dropped. Our number of sales dropped quite significantly. However, the second half of the year saw quite a significant uptick. If you look at that red line, there was a bit of a backlog of demand for phones that gave us quite extraordinary sales. And then that has stabilized thereafter. And we stayed, the demand even through December, January was very strong, which is unusual. So really, this business has had a dreadful first half and an excellent second half. And we're really quite excited about the direction we're going in here. So to put that in perspective, during the year until February 2021, the book, that's the collectible book, has grown from 60 million rand to 125 million. It's quite a substantial growth. The business has more than doubled in size. And the deals that we're writing per month have doubled from 330 deals per month to over 600 deals per month. So this business is really cooking on gas at the moment, and we have great expectations from it. What COVID has done is it has emphasized to employers the need to have a digital device whereby they can communicate with them. Sorry, to employers whereby they need to have a digital device by which they can communicate with their employees. So we've seen quite an uptick as well in notebooks that we rent on a 24-month or 36-month basis. So if we go back a year, notebooks represented about 10% of our sales. At this point in time, notebooks are representing about 30% of our sales. And it's a more profitable product to sell than a cell phone. If we can go on to look at the results, firstly looking at the balance sheet. Which is on page 14. It's quite a remarkable balance sheet. If we look at our assets to liabilities, the 26:1 is really a bit misleading because the liabilities are all within the group. So we don't have any third-party debt. The only third-party debt throughout the group actually is, current trade suppliers and rentals and telephone accounts and so forth. So we have this extraordinary company with, on the financials we're looking at here, 465 million rands worth of assets and 17 million rands worth of liabilities, all of which are within the group. So very, very strong balance sheet. You see our liquidity ratio is also extraordinarily strong at 10:1. And cash and cash equivalents at the reporting date was 72 million. And that's kind of the low point of cash over the period of the year. New investments during the 2020 year were 120 million, and that was mainly in our property sector. If we look at the income statement, and for those of you who have the financials, the last page, page 55, is the most valuable page to look at. Our revenue, which was mainly dividends received, was 23 million. Fair value adjustments, the net adjustments were minus 26 million. That's new mobile, mainly new mobile, as previously discussed. Our investment income, which is interest income, was 2.1 million. Management fees of 4.2 million. That's at 2% of capital raised. And our net loss after tax was just under 12 million rand. So we have had a year where we've had a reversal, and that reversal largely attributed to the revaluation of new mobile, downward revaluation of new mobile. You've seen what's happened in the last 6 or 8 months. We can anticipate for the current year, the 2021 year, that we'll be writing that asset back up. At this stage, we're not sure to what extent, but our valuations of assets are independently performed and then reviewed by our auditors. So what we've done is we've taken quite a conservative view in the valuation of new mobile, and this was really for 2 reasons. First of all, the dramatic impact of the lockdown on our ability to sell, and secondly, the anticipation that we had of large-scale retrenchments, which would mean many of our customers would not actually have a job to facilitate the repayment of their phones. The good news is that we haven't seen anything like the scale of retrenchments that we expected amongst our customer base. Now, the strategy with new mobile really is to target blue chip employers. They have very stable workforces, and generally their employees are better paid than smaller businesses. So that strategy has worked really well. And in fact, if you look at the entire book of new mobile, it's a much stronger book than it was a year ago. There's one item I do need to bring attention to in the income statement. You will see there's 12.8 million rand in consulting fees. This is a little bit misleading because we're reporting a consolidated income statement, whereas in fact we have different share classes. That 12 million rand consulting fee relates to the Class C asset that was a pusher that was sold during the year. So the Class C assets are managed by ourselves together with a company called Campan, and those were performance fees that were really paid to Campan. So that has only affected the Class C shareholders directly.
Thanks, Neil. Thank you for that extremely interesting scenario with the activities of the company during these difficult times. As explained by James Rothman, if there are any questions which any member would care to direct to Neil arising out of his presentation, please feel free to put those through to us, and we'll address them a bit later in the proceedings. I'd like to hand over to the chairman of the audit committee, Kobus Nel, to present the audit committee report.
Thank you, Mr. Chairman. James, I see you've blocked my camera, so clearly there must be a reason why you don't show me on the video. As Alan said, I'm Kobus Nel, the chairman or the chairperson of the audit committee, and together with Alan and Mike Heineberg, we formed the audit committee. Section 94 of the Companies Act requires all public companies to have an audit committee that consists of at least 3 non-executive directors. The main duties of the audit committee is to present the financial statements and together with the auditor ensure that the presented financial statements are a fair representation of the financial affairs of the company. Secondary duties include monitoring of the internal controls, assessing risks, and appointing the auditor. Obviously, with COVID, we had some interesting times to achieve all the duties and fulfill all the questions that was asked of us. We had extremely meaningful interaction with the auditor, and as Neil referred to, the valuations of the underlying companies was a hot topic discussed. And after all the interaction, we feel that the financial statements presented is a fair representation. The full audit committee report can be read together with the financial statements and will be adopted as such together with the financial statements. Our recommendation is that Middle Partners be retained as auditors for the coming year, and further recommendation is that Greg Sinclair be added to the audit committee as currently an auditor at Rob Sinclair, and we feel he'll contribute to our functions. That's it, Mr. Chair.
Thanks, Neil and Kobus. Ladies and gentlemen, I'll now go over to the formalities of the AGM. The resolutions are before you. In the interest of practicality, I hereby propose the tabled resolutions. May I have a seconder, please? Thank you. We have one. An ordinary resolution requires the support of at least 50% of the votes exercised by shareholders present or represented by proxies. And likewise, I remind you, a special resolution requires the support of at least 75%. We move on to ordinary resolution number 1, which deals with the adoption of the annual financial statements. As set out in the notice convening this meeting, these are the financial statements for 2020. Are there any questions anybody would like to raise arising out of the annual report? Okay, we haven't received anything as yet, but do feel free to submit them if you wish going down the line. And now put to the meeting resolution number 1 as an ordinary resolution. If you could all vote as outlined by James Rothman. it seems that we,
Carried.
yeah, the resolution, everybody has voted. Thank you. We then go to ordinary resolution number 2, the appointment of the auditors. And this resolution may be read in conjunction with the explanatory note number 2, which was distributed to members. Are there any questions arising from this resolution? As there are no questions, I put to the meeting resolution number 2 as an ordinary resolution. Thank you. We have received your votes. Ordinary resolution number 3 concerns the appointment of audit committee members and may be read in conjunction with explanatory note number 3. Are there any questions in this regard? We have received no questions, and I therefore put to the meeting resolution number 3 as an ordinary resolution. Thank you. Ordinary resolution number 4, appointment of investment committee members. This may be read in conjunction with explanatory note 4. Are there any questions in regard to this resolution? We don't seem to have received any questions. Therefore, I put to the meeting resolution number 4 as an ordinary resolution. Thank you. We'll now attend to the special resolutions, and special resolution number 1 has to do with directors' fees, and this may be read in conjunction with explanatory note 5. Are there any questions arising out of the proposal concerning directors' fees? We don't appear to have any questions in this regard, so I put to the meeting this resolution as special resolution number 1. Thank you. Special resolution number 2 is the approval of the MOI amendment. And this may be read in conjunction with explanatory note 6 for your information. Are there any questions? There being no questions, I put to the meeting this resolution as special resolution number 2 for your consideration or voting. Thank you. Special resolution 3 concerns financial assistance, and this is outlined in explanatory note 7. Are there any questions in this regard? There being no questions, I now put to the meeting this resolution as special resolution number 3. Thank you. We will now attend to the final 3 ordinary resolutions. Ordinary resolution number 5 is a general resolution which authorizes any director or company secretary to sign all documents to give effect to special resolution number 2, and this may be read in conjunction with explanatory note 8. Are there any questions in this regard? There being no questions, I now put to the meeting resolution number 5 as an ordinary resolution. Thank you. Ordinary Resolution 6, election of the Social and Ethics Committee. And this can be read in conjunction with explanatory note 9. Are there any questions on this resolution? There being no questions, I now put to the meeting resolution number 6 as an ordinary resolution. Thank you. Ordinary Resolution 7, election of directors. This resolution may be read in conjunction with explanatory note 2. Are there any questions in regard to this resolution? There being no questions, I now put to the meeting resolution number 7 as an ordinary resolution. Thank you. That, ladies and gentlemen, concludes the business of voting. We will now take any further questions while the votes are being tallied. And I'll just confirm with James Rothman whether we have in fact received any questions.
No, Mr. Chair, we haven't received any questions as of yet, not on email, not via Zoom.
Okay, we haven't received any further questions concerning any of the issues raised. And I would like to ask James to confirm whether we have in fact tallied the votes and we have a result.
Just confirming, going through the final votes that we received. Yeah, so the majority votes for all the resolutions are for the resolution.
So the Secretary informs me that all the resolutions were passed by the requisite majority. That, ladies and gentlemen, concludes the annual general shareholders meeting of Anuva Investments Limited. And we thank you for your attendance at this first and maybe even our last online meeting. And remains for me to thank all the team behind the scenes for the work and efforts that have gone into preparing and presenting this meeting. And indeed to the whole team at Anuva for having weathered an extremely difficult year. And on behalf of all of us, we wish you a prosperous and blessed year with good health.
Thank you, Mr. Chair.
We've got a message from Michiel de Wit. Thank you, well done, and good luck, guys.
Thanks, Michiel.